Okay, peeps, welcome back. So today we're going to be talking about 10 dividend growth stocks on sale right now that you can buy that pay passive income. Let's get it. So the first dividend stock I want to bring up is AEP, or American Electric Power. Go ahead and pull the chart up for that one. As you guys can see on the weekly, this thing pretty much only ever goes up. The discount that you'd be looking at right now on the stock is roughly about 29%. And keep in mind, these are all dividend growth stocks. These are not dividend income stocks or YieldMax ETFs. So if we go over to NASDAQ.com, you can see the AEP dividend history here. Has a long track record. It's basically been raising its dividends since 2004. And on Yahoo Finance, the market capitalization of the company is $39 billion. And so, yeah, that's the first stock. The second stock would be Apple Inc., ticker symbol AAPL. Now, you guys can see on the stock that it pretty much just goes straight up and to the right. So this is a very good stock in terms of growth, even though it has relatively low yield. And this thing is currently down about 8 to 9%. And if we take a look at the dividend, you guys can see that they have been, well, okay, I'm not really sure what happened here. I think that, well, I'm not really sure what happened here. Maybe they had a stock split or something. I don't know. But Apple more or less has been raising its dividends pretty much since 2014, minus whatever this is. But Apple's a very large, big cap, mega cap tech stock company. It's the largest company in the world. So the dividend yield is not that much. But again, you guys can see why I own APLY over AAPL. But if you're looking for upside growth, I mean, this thing is pretty much where it's at. So that's stock number 2. Stock number 3 would be Altria Group, or ticker symbol MO. As you guys can see, this thing has a very, very long track record of upwards trajectory from pretty much all the way back here. For some reason, it went down in 2017. I'm not sure why, but we're not going to measure that. We'll measure it from the most recent peak. Would put it down about 24%. And I think Altria did actually just have a dividend raise recently. Don't quote me on that, but I think it's actually at 98 cents now. So from the height of the low, you're talking 43%. And Altria Group is a dividend king, which means it's raised its dividends for more than 50 consecutive years. The current yield is 8.53%. It's 94 cents. That's probably going to change in October, which would be the next time that they pay out a dividend. You guys can see here that this thing has gone up for a long time. It's gone up since basically 2008. All right, so the next stock on the list would be Comcast, or CMSCA. So you got Comcast Corporation, another great dividend growth stock. As you can see, this thing just pretty much goes up over time. Minus the bear market, which started right about here. That's the reason why that drop happened. But if we go from the peak to where it's at right now, you'd be able to pick this thing up at a 28% discount. So CMCSA, you get a 2.6% yield, 29 cents per share. If we go down here to the dividend history, you guys can see that they've paid out dividends for a long time, but they've basically been raising their dividends since roughly about 2017. So far we have AEP, which is an electricity company. Nobody can live without electricity, right? You gotta have the lights on and stuff. Apple, which is your iPhone. Altria, which is for people that smoke, vape, do that kind of stuff. And CMCSA is internet. The next one we're going to be taking a look at covers the real estate sector, which is WP Carey. WP Carey is a pretty much a growth-based stock. It's been kind of chopping sideways since 2013. I'm not really sure why that is, but from the high to the low is 33%, so you'd be getting a 33% discount. If I were to measure it from the low to the high, you get about a 50% gain. Take a look at the dividend yield. The dividend yield currently is 6.71%, which outpaces inflation. Inflation is currently at around 3%. And you guys can see that they've paid out a dividend for a very long time. It looks like they've actually raised their dividend for a really, really long time here. I want to say basically the whole time, pretty much. If we scroll through this, minus maybe like a couple of special payouts or something. I'm not sure what these are. So this is definitely a dividend growth stock. This covers real estate. The next X date would be roughly in October. So that covers real estate. The next one would be Chevron CVX, which is your gasoline to fill up your car. This thing's more or less been on a tear. I personally have not picked this up the entire time. The reason being is because I'm waiting for it to hit this support level here before I pick it up, which means I'd get it for a cheaper price and a better yield. But if we measure from the high to the low, you can see this thing's down roughly about 12%. Take a look at the dividend. Dividend yield currently is 3.6%. Again, when the price comes down to this support level, assuming it does, the yield will be much higher. And gas prices will probably come down by then too. But the payout's pretty good. I mean, you get $1.51 for every share that you own. It's $166 per share. That would probably be roughly about the equivalent of 8 AAPL shares. So they've been increasing their dividends for a really, really long time, as you can see here. A lot of dividend growth, a lot of upside potential. All right, so stock number 6 in the consumer discretionary or food, which would be Hormel Foods Corporation. You guys can see on the chart this thing's pretty much only just ever gone up. But as of recently, it's had a pretty substantial drop. You get about a 32% discount on the stock. It would cost you about $18 a share less to buy it right now than it would have in March of 2022, pretty much right when the bear market started. And tell me if I'm wrong here, but I think that HRL is also actually a dividend king, or at least a dividend aristocrat. So you get a dividend yield that's pretty much about the same as inflation, 2.9%. And as you guys can see here, they've been paying dividends for a long time. It looks like they have increased their dividend consistently since roughly about 2000. Maybe not exactly 2000, but pretty much since 2016. But the idea here is that they pretty much have long track records of dividend growth and large upside potential. So that covers food or discretionary income. Next one would be contractor defense, or basically war, if we're talking about war here. I hate to use that word, but a way for the United States to protect themselves against invasion and stuff like that, defense contractors. So this thing has pretty much only ever gone up, as you guys can see, straight up and to the right. If we zoom in here, it kind of had this topping out here, and then you get about a 14% discount on this stock. LMT currently pays out $3 a share. You're getting about a 2.7% dividend yield. This thing has been raising its dividends pretty much since the year 2000, so it's had a very long, consistent growth record of dividend increases and also share price appreciation. And keep in mind, guys, these stocks are dividend growth stocks. There's going to be a lot more upside than the YieldMax funds, and the dividend's not going to be as high. But you will also get dividend increases over the time, over the years, which would be a good way to offset some of the possible NAV erosion in the YieldMax funds. So stock number 9 we're going to look at is in financials at Ally Bank. you guys can see that they've been around for a while, not really a long time, pretty much since 2014. I've used Ally Bank in the past. They're very good. It's also a good place to get high yield savings accounts if you want those right now, since the Fed funds rate is high. So from the top to the bottom, talking about a 49% discount. And the dividend yield currently is 4.22% or $1.20 per year. And since the inception of their dividend, as you guys can see, they pretty much just continuously raise their dividend every single year for the last 7 years. So that's financials. And the last one I want to bring up is AWR, or American States Water Company. So this is exactly what it sounds like. It's a water company, as you guys can see, straight up and to the right. People can't live without water. I mean, you need water to take a shower. You need water to wash your car. You need water to drink, to stay hydrated, to wash your dishes. I mean, I could go on and on here about the use cases, but each one of these stocks have particular use cases, if you guys haven't noticed, that are pretty much essential to consumerism and to humanity and stuff like that. So the current discount is about 22% from the high to the low. And if we take a look at the dividend yield, you can see that the dividend yield currently is 2.1% or $1.72 per year. Looks like they just actually had a dividend raise. So they increased their dividend by about 4 cents, which if you do that on a percentage basis, that's about a 10% increase, because 10% of 40 cents would be 4 cents. And if we go back in history, you can see they've been paying dividends since 1995. They're a very old, well-established company, and they've been increasing their dividends pretty much since 2002. So basically about since the dot-com bust, and they just continue to increase it over time. I'm not sure what happened here, but maybe they restarted it or there was like a stock split or something like that. I'm not entirely sure, but as you guys can see, it goes up over time. You get dividend increases every year, and the upside potential over the years is massive. So it's a way to grow and protect your capital against NAV erosion or anything else like that. Anyways, hope you guys enjoyed this video. These are 10 stocks that are currently discounted as of right now. Please like, comment, and subscribe, and I will see y'all later. Peace.